So REITs have been making a lot of news lately, especially because of the KRT REIT IPO. It is the biggest REIT IPO in India so far, and they have been doing a lot of marketing around themselves and around the concept of REITs in general. Apart from this, REITs are one of the most frequently requested questions in the comments and community, whether they are safe or not, whether they are a good investment or not. So in this video, I'll give a quick overview of REITs, what is my opinion about them, and whether I have invested in them or not. So REITs offer fractional ownership of some of the most premium or prime real estate across India. Fractional ownership means that I can start investing in this real estate with as much amount as I have. It starts from as low as 100 rupees or 500 rupees. And whatever amount I invest, I'll start getting a rental yield or dividends on a monthly or quarterly or annual basis, depending on how the particular REIT operates. These REITs are traded on stock exchange, so investing in them is extremely easy, just like buying a stock or investing in mutual fund. And you don't have to get into the hassles or the headaches, essentially, of managing or owning a real estate property. So I like to see REITs as a combination of, or a good mix of real estate and stocks. Just like real estate, you get regular rental yield or dividends, and because they are traded on stock exchange, you get very high level of due diligence and trust, along with a great liquidity. The biggest problem with real estate is that you don't get liquidity, but here you get that, and you can trade it like stocks or mutual funds. Now, what kind of returns can you expect out of REITs? So a realistic number would be somewhere between 5 to 6% of rental yield or dividends annually, and 4 to 5% of appreciation. So the net returns that you get is somewhere in the range of 8 to 12% per annum. This is of course pre-tax. Now I think that REITs are a great way to diversify into real estate without needing crores of rupees or without taking a large debt. They are convenient, they are highly vetted, they are backed by some of the best assets available in the country, and there is very good liquidity. They are very easy to sell and purchase. But I haven't still invested in them because of two reasons. The first reason is that you actually don't own a hard asset. When I invest in real estate, I invest there for returns, but I also do it for owning a real asset, something like land or a flat. In case of REITs, that tangible asset is not there, so that is something that I don't like. I see them something similar to gold ETFs. Gold ETFs are great. They are backed by gold, but you don't actually own physical gold, which I like to have for the sake of hedging that I'm actually buying it for. And the second reason is that REITs do not seem to fit well in my portfolio. It does not give me the comfort or peace of mind that I want from a real estate. It does not give me the uncapped potential that stocks give or mutual funds give. And my fixed income is distributed in two parts. For the safer part, it is in FDs or government bonds or debt funds. And for the high risk part, it is in corporate bonds that is giving me around 12.5% CAGR. But I do plan to invest in REITs and see how it actually goes in reality, because assumptions can be incorrect a lot of times. They have been so for me in the past. But the point I'm trying to make is that despite their multiple benefits and their genuine advantages over other asset classes, as of now, they do not excite me for my use case. But REITs can be a great option for multiple use cases. I can think of three straight away. The first use case is that if you don't like the hassles or if you don't have the time to get into the operations of owning or managing a real estate property, then REITs can make a lot of sense. In my opinion, properties also give you 10 to 12% in the long run, and you have to keep on holding them for a long period. But that comes with a lot of headaches, a lot of operation headaches. In case of REITs, you don't have that, and you still get 10 to 12% interest. And I think that is great. The second use case could be that you want to invest in real estate or property, and you don't have crores at your disposal as of now. So what you can do is make a real estate bucket in your portfolio, start investing small via REITs, make sure that this bucket keeps on growing, and when it is large enough, you take it out and invest in a real hard property. And the third use case could be that if you invest in debt funds or FDs and government bonds, but you want something with higher return, with good safety, and you do not like corporate bonds because corporate bonds are usually higher in risk than REITs, then REITs can be a good option. So that's it for this video. I hope you find this useful. If you have any questions or any doubts regarding my personal finance journey, feel free to drop a comment and I would love to discuss it.